What's going on, everybody? Do you know what toxic order flow is and how that might negatively impact your trading results of your automated trading strategy? Today, I kind of want to jump in and talk about some terminology as I continue to refine my market making algo that I am working on for the crypto markets here. So, a really big piece of trading strategies, specifically trading strategies that trade on higher frequency time frames, is the idea of adverse selection. So let's take a step back, actually, before we even talk about what adverse selection is. Let's talk about what an informed trader is. So there's a few different terms I kind of want to define here that might help you as you're going through your own process of refining your trading strategy. So the first term is called informed trader. Now this is a trader that has more information than you do. It's a trader that knows where the price is going to go because they have some piece of information that you don't have. And so they're either going to buy or sell based on that piece of information. And you may or may not be on the other side of their trade. Ideally, you don't want to be on the other side of on their trade, right? So if they are, say, a market maker that has access to, sub millisecond data from an exchange, and say on Binance, for example, and they know a huge order just came in and got filled, they can go out and try to get fills on other exchanges before other traders have a chance to react, right? So they have a piece of information that these other traders don't have. Now, let's say I have a bid sitting out there. They know the price is about to move down on all these other exchanges based on their information, and they hit my bid. Now, that is called adverse selection because my bid was selected because somebody had a piece of information that I did not have. Now, obviously, this is not ideal, right? Because they know the price is going down, and I don't yet know that, and my bid just got hit, and then the price moves down from there. So I'm now long, and now I'm sitting on a loss. Now, if you see a pattern of this where you have a bunch of sell orders coming in, for example, and yet you don't necessarily know that something is actually structurally changed in the market, like there's some new piece of information out there that you're not aware of yet. All those sell orders are called toxic order flow, right? So there's a bunch of informed traders or one informed trader that's sending a bunch of orders to an exchange. They know that the price is going to be moving down, and so they're going to be, hitting your bid all day long before you even realize, oh my God, like I shouldn't be putting my bids here because XYZ happened and I should have moved my bids lower. So the idea that order flow coming in is has more information than you do about where the market's about to go is called toxic order flow. So why is this important for high frequency traders? Well, obviously, if the market is about to move against you, you want to either back off of the midpoint or just pull your quotes altogether. You just don't want to be trading them because you don't necessarily know where the market is going to go. And so trying to identify times when the order flow is toxic and backing off of that side of the market is super critical, right? Especially in a market making algo. You don't want to be stacking your bids there and somebody just is filling them all day long, and then you're loading up on inventory and then the market just takes a dump there. So I have been refining ways to that my algo can identify these sort of regimes and then act accordingly. So there's a number of different things that you can do. Some of them are fairly simple. Some things are very sophisticated, right? And it kind of comes down to, how sophisticated your algo is, what your rules are around your algo, how frequently you're trading, and so on. So that's kind of been where I am right now. I'm seeing that my fills, for the most part, in the market making algo, have been pretty good. I've been earning a pretty good spread off of these, but I sometimes start accumulating inventory before the price like moves against me. And so trying to come up with some metrics around toxicity and when I want to pull bids, for example, or widen the bid spacing, um, is going to be super critical. So right now, what I got going here on Paradex, as you can see, my orders are getting placed. I'm currently quoting 4 levels on Zcash here, and the reason I've been liking to test on Zcash is the spreads can be relatively wide, anywhere from 3 to 10 basis points, kind of throughout the course of normal trading, and then there's some pretty decent volatility on this as well. So it gives me a chance to kind of exercise the algo quite a bit with a few different types of market regimes. I can pull up the UI here of the strategy itself. So basically, what I'm showing here is I've just got a test account here set up on Paradex. I've got it funded with about $600, and this is the profit and loss for the day on it. I mean, ideally, I'm trying to shoot for like at least 25 basis points a day is kind of the goal I'm shooting for here. I've got the bids and asks that I'm currently quoting right now. I've got the current spread that's showing on Paradex, so the best bid and ask on Paradex right now, along with some other statistics about kind of what's going on in the market. And I can define some of these other things in a future video if it would be helpful to you guys. So stuff like around what is order book imbalance, what is cumulative volume delta, the funding rates, things like that. So I've also got the fills that are coming in. Mark out is another term that you'll hear frequently used, especially in high frequency type strategies. So these are all kind of things that I'm measuring here. Spread capture is another one. And then I've got some statistics down here that are kind of telling me about the health of the kind of the microstructure of the market and where it might be heading over the very, very short term based on what it's kind of seeing as far as the order flow and how many orders are sitting in the order book versus buys versus sells and that sort of thing. And then based on that, I've created a model that is coming up with a toxicity score for both the buy and the sell side. And when it reaches a certain threshold, it says, you know what, I'm gonna pull back. I'll still quote a bit on that side, but I'm not gonna quote my tightest level. I'm gonna back off a bit on one side if I'm detecting that the toxicity of the order flow on that side is getting pretty high. So that's kind of my latest iteration. I've got a few parameters defined in that model. Not doing anything super fancy yet. No machine learning or AI or anything like that. Um, but I'm basically just looking at some basic statistics on the microstructure of the market and seeing if that can help me get an incremental improvement out of this strategy. So what I'm seeing basically is I'm making money on the spread. I'm making money with the markouts, meaning in general, my markouts aren't too bad. Markout being basically how much does the market move in your favor or against you after your order gets filled. Um, but what's killing me is the inventory drift. So as I'm accumulating inventory on my algo, the price sometimes is either drifting for me or against me, and in general, the inventory drift is where I am losing money on this. So I'm trying to figure out how to be more selective on where I'm placing my orders and the size of those orders. So that's kind of where I'm at right now with tweaking this. So I'm doing iterations of this strategy, make some refinements, put another version out there, let it run for at least a day. I know if I can get a few hundred trades at least, I can get a somewhat decent sample size. Obviously, that's not going to cover a huge range of market regimes, that might occur, or price shocks or anything like that. But if I can at least kind of get this working, um, and in a stable state under stable market conditions, then I can start refining more for some of the edge cases where the market might be going crazy. But in the meantime, it's basically gonna get out of the market if things start getting pretty crazy as far as volatility and price moves go. So that's kind of where things are at right now with the toxicity indicator, trying to figure out when to quote, where to quote. Um, so I'd like to hear from you guys what you'd like to see. Are you struggling at all with a high frequency system and toxicity of order flow? And if so, what are kind of some things that you've looked at for for adjusting based on that? Or if you're trading at a slower time frame, what are some of the other challenges that you've kind of run into with your strategy? And where are you trading at? Also, I want to hear also the other exchanges that people are using. I'm primarily trading on Paradex right now for this strategy, but in the future I might port my API over to connect to some of these other exchanges as well. So hope you guys are having an awesome week, and I will see you soon. Bye.